Good evening. Thanks for joining us on India Business Hour. I'm Shireen Bhan. The headlines we're tracking for you this evening. India's GDP growth in the first quarter ahead of estimates accelerates 7.8% in Q1, the fastest rate of growth in 15 months. Services and government spending propel growth. Manufacturing is largely flat. Mining growth contracts. Reliance Jio is set to go public in the first half of 2026 as Chairman Mukesh Ambani at the annual general meeting also announces plans to take Jio global by expanding outside India. Jio now has more than 500 million customers. Mukesh Ambani announces the formation of a new AI subsidiary called Reliance Intelligence to bolster its AI offering, signs a joint venture with Facebook's parent Meta. Jio also launches a slew of products including an AI-powered smart glass among others. Reliance will double its EBITDA by 2027, powered by growth in FMCG and AI, says Mukesh Ambani. The FMCG business aims to hit 1 lakh crore rupees in revenue within 5 years. The Sensex and the Nifty declined 2% this week, the biggest weekly fall in the last 5 months. Mid-cap index down over 3%. All sectoral indices close in the red, barring FMCG. The rupee tumbles to a new record low. $1 is now worth more than 88 rupees as fears over higher US tariffs jolt the money market.
हम ना तो कभी झुकेंगे, ना कभी कमजोर होंगे, एक साथ मिलके हम आगे बढ़ते रहेंगे.
India will not bow down to discrimination, says Commerce Minister Piyush Goyal in his first comment since the 50% US tariffs kicked in. Promises to expand the markets for Indian exporters, says exports this year will be higher than the previous. Prime Minister Modi woos investors in Japan, calls for closer cooperation between both nations to bolster manufacturing, semiconductors and deep tech. The Prime Minister will now head to China in what will be his first visit in 7 years to hold bilateral talks with President Xi Jinping as part of the SCO summit. The central government's proposed GST cuts are aimed at giving a big boost to consumption. Small cars, two-wheelers, consumer durables, garments and apparel, all likely to get cheaper, could bring much-needed cheer for consumers facing businesses. Ministers from 8 states support the proposed GST reforms but call on the union government to protect state revenues. Proposed compensation cess be replaced by an additional levy on sin goods to shore up their coffers for at least 5 years. The Maratha Quota agitation arrives in Mumbai. The leader of the movement begins an indefinite fast until the demand for reservation is met. Traffic snarls across Mumbai. All of that and more coming up for you, but the big story, and it is the big macro data for the day. The first quarter GDP cheer is our top story this Friday evening. The Indian economy saw 7.8% growth in the last quarter. That's far higher than estimates. This is the fastest rate of growth in the last 15 months. The services sector and government spending, the big drivers that have propelled growth. Lata standing by now to decode the numbers for us. A very, very positive surprise, Lata, ahead of all estimates.
That's right. It's an outstanding GDP number at 7.8%, the strongest in 5 quarters and compares with, just 6.5% year ago. The GVA number is also very important. It's come at 7.6. Sometimes the GDP looks good because indirect taxes are very high and subsidies are low. No such tomfoolery over here. The GVA, actual value added by the economy, is also growing at 7.6% or has grown at 7.6%, strongest in 6 quarters. The nominal GDP, that is, at current prices, if you look at the total amount of goods and services produced, that's come at 8.8%. Our poll was only 8%, and even the budget has assumed only 8%. So even that's a damn good number. Big contributors are really the services sector. Services at the trade, hotels, transport, communication, a very employment-intensive, labor-intensive sector, that's grown at 8.6. Damn good. Again, here, the very low deflator. WPI and CPI are used to deflate from current to constant prices. That number is going to be very low because the WPI was negative. So that has helped the services sector look very good. Again, public administration, government, capex and revenue expenditure has been very strong. So public administration is contributing, growing at 9.8%. Again, very good. Now, what is the takeaway for the economy? One, you are not going to expect a RBI rate cut. You know, if the economy is growing at 7.8%, why would you expect a rate cut? A second point is because the nominal GDP is growing at 8.8%, the overall GDP at the end of the year may look bigger, and therefore it might give the government a fiscal space to design a package for exporters. Even if they spend a little more than the 15.9 lakh crore fiscal deficit, they may still not reach 4.4%. So it gives them space. All these are the positives that you can take away from the GDP number.
Real wages in agriculture for both men and women have risen very sharply based on data from Labour Bureau and the Ministry of Statistics on CPI rural, inflated by CPI rural. So that also helps. So a very strong agricultural sowing season, good monsoon, good storage level in reservoirs, and rising agricultural wages also augur well for the next quarter, the July to September quarter GDP numbers. There is some uncertainty with respect to the duration of the period for which the additional tariffs related to Russian crude oil purchase would last. But in general, the conversations are going on, and there is an expectation that we will see some kind of a resolution in the not so distant future. And therefore, we do believe that our growth target for the current financial year, especially in the light of the strong showing by the economy in the first quarter, we will still retain the 6.3 to 6.8% range that we had outlined for the full financial year.
Well, that is the Chief Economic Advisor, V. Anantha Nageshwaran, on the GDP print. And you can catch our coverage on the numbers on Indianomics. That's coming up for you at 9:30 p.m. right here on CNBC TV 18, GDP cheer for the economy. But the big corporate story this evening, towering plans for Jio, pressing the accelerator on AI and fast-tracking the rise of its FMCG business. The annual general meeting of Reliance Industries saw Chairman Mukesh Ambani lay out the growth blueprint for the oil-to-tech conglomerate. Let's start with the big one, Reliance Jio. This was much expected, anticipated, and it is now official. It is all set to go public in what is potentially the biggest listing in the history of the Indian capital markets. The big headline at the AGM, Reliance Chairman Mukesh Ambani also announced that the telecom giant plans to expand beyond Indian shores. So Jio, all set to go global. It now has more than 500 million subscribers. So Jio set to go public in 2026. The second big headline, Reliance has pressed the pedal on artificial intelligence. Mukesh Ambani announcing the formation of a new AI subsidiary called Reliance Intelligence and laid out a four-pronged approach, which includes housing AI infra, sealing global partnerships, and building AI services, also housing AI talent. Reliance has signed a joint venture with Facebook's parent Meta. Jio Chairman Akash Ambani also launched a slew of products, including AI-powered smart glasses. He also launched a Jio PC, which will provide an AI-ready computer on any screen. The Reliance AGM also laid out the company's growth roadmap. It will double its EBITDA by 2027, powered by growth in the FMCG and AI business. Its FMCG business aims to hit 1 lakh crore rupees in revenue within the next 5 years.
It is my proud privilege to announce that Jio is making all arrangements to file for its IPO. We are aiming to list Jio by the first half of 2026, subject to all necessary approvals.
Google and Reliance are partnering to help all of Reliance's businesses transform using AI, from energy and retail to telecom and financial services. To support this AI adoption, together, we are establishing a Jamnagar cloud region.
With strategic partnerships and a clear roadmap, we will take Jio services international, creating value for partners and shareholders alike.
Meta and Reliance are going to deliver our open-source AI models to Indian businesses to help them fuel their work. With Llama, we've seen how AI can amplify human potential, boosting productivity, inspiring creativity, and accelerating innovation. And now, with Reliance's reach and scale, we can bring this to every corner of India.
In just 3 years, RCPL has achieved what took other companies decades. Last year alone, we had revenues of 11,500 crores, making us the fastest growing FMCG player in India.
Across facilities, we are shifting to clean fuels. Our efficiency programs have delivered 10 million gigajoules of energy savings in 3 years.
Well, the headlines coming in there from the Reliance AGM, the big ones, as we pointed out, the Jio IPO in 2026 and Reliance's foray into artificial intelligence with a new entity called Reliance Intelligence. But moving on now to the market action of the day. The markets fell for the third day, the Nifty ending at a 3-week low with Reliance and financial heavyweights seeing low ticks today. Auto stocks saw some profit booking, with stocks falling by about 3%. For the week, the market's recording the biggest weekly fall that we've seen in 5 months, with the Sensex and the Nifty falling nearly 2% each. The Bank Nifty also fell almost 3%. The mid-cap index recorded a fall of more than 3%. That was the picture for the day and the week. From equities, let's talk about the currency market. The rupee tumbling to a new record low. $1 is now worth more than 88 rupees as fears over higher US tariffs jolted the money market. But there's more macro data. India's fiscal deficit in the April to July period stood at 4.68 lakh crore rupees. This represents nearly 30% of the full-year budget target of 15.69 lakh crores. The total expenditure came in at 15.6 lakh crores, while the gross tax revenue grew modestly to 10.93 lakh crore rupees. Non-tax revenue amounted to 4 lakh crore rupees, and this was aided by 2.1 lakh crore rupees dividend transfer from the Reserve Bank of India. The big story, Commerce Minister Piyush Goyal says India will not bow down to any form of discrimination. These were his first comments since the 50% US tariff kicked in. Minister Goyal did not explicitly name the US, but he promised to expand the markets for Indian exporters. He believes exports this year will still be higher than last year. Take a look.
कोई हमारे साथ भेदभाव करने की कोशिश करे, कोई हमारे साथ अच्छा फ्री ट्रेड एग्रीमेंट करना चाहे तो उसके लिए तो हम सदैव तैयार हैं, पर किसी भी प्रकार का भेदभाव, मुझे लगता है भारत का 140 करोड़ देशवासियों का जो आत्मविश्वास है, आत्मसम्मान है, उसको मद्देनजर रखते हुए हम ना तो कभी झुकेंगे, ना कभी कमजोर होंगे। एक साथ मिलकर हम आगे बढ़ते रहेंगे, नई मार्केट्स कैप्चर करेंगे। मैं आपको दावे से कह सकता हूं, इस साल हमारी एक्सपोर्ट पिछले साल से ज्यादा होगी।
That is the Commerce Minister, his first comment since the imposition of the 50% tariffs by the US. Meanwhile, Prime Minister Modi arriving in Japan, marking his 8th official visit to the Asian country. The Prime Minister met business leaders in Tokyo, where he addressed the India-Japan Economic Forum. Speaking at the summit, he lauded the relationship between both sides and said the Japanese companies invested $13 billion in India in the last 2 years, describing India as a powerhouse of talent. Modi called on Japanese business leaders to make in India for the world. He also said that India will soon become the third largest economy. The Prime Minister held bilateral talks with the Japanese Prime Minister in a bid to further strengthen the strategic partnership between both nations.
हमारा विकसित भारत बनाने का संकल्प है, हमारा कमिटमेंट है, कन्विक्शन है और स्ट्रेटेजी है, और विश्व ने इसे रिकॉग्नाइज ही नहीं, एप्रिशिएट भी किया है। S&P ग्लोबल ने 2 दशक बाद भारत के क्रेडिट रेटिंग अपग्रेड किए हैं। द वर्ल्ड इज नॉट जस्ट वॉचिंग इंडिया, इट इज काउंटिंग ऑन इंडिया।
Well, that's the Prime Minister in Japan, and he will now travel to China to meet Chinese President Xi Jinping as both nations look to strengthen ties amidst US President Donald Trump's tariff war. The two leaders are expected to hold bilateral meetings on the sidelines of the SCO summit in Tianjin. This will be the Prime Minister's first visit to China for the first time in 7 years. Russia's President Vladimir Putin is also scheduled to attend the SCO summit. Of course, we will be tracking those developments very closely here. Now, India is staring at 50% tariffs on exports to America after the additional 25% penalty levy came into effect this week. More than 60% of India's exports to the US now face 50% tariffs. Only India and Brazil have been hit with the highest tariff rate of 50%. The US has also ramped up its rhetoric against India. Earlier this week, trade advisor Peter Navarro had termed Indian negotiators, and I quote, arrogant, and dubbed Russia's Ukraine invasion, I quote again, as Modi's war. Later, in an extensive post on social media, Navarro went on to highlight that the 50% tariffs are also aimed at cutting off, in his words, the financial lifeline that India has extended to Putin's war machine. Navarro also claims that all the proceeds from buying Russian oil flow into the Indian energy companies and directly into Putin's war chest. So, how valid are Navarro's allegations? The fact that he even calls it Modi's war, that is an absurdity to start with. But let's go across to Parikshit now to break this down for us. As I pointed out, Parikshit, it is an absurd comment coming in there from Peter Navarro, which he keeps reiterating. This is not India's war to start with. But on the issue of Russian crude, what does the data tell us?
Well, White House Trade and Manufacturing Advisor Peter Navarro has blamed India for giving a financial lifeline to Putin's war machine by buying Russian oil. Statistics show India is not the only buyer of discounted Russian crude. If you look at the top 5 buyers till August this year, then India is not alone. According to data sourced by CNBC TV18 from Kepler, China is the biggest buyer at 1.8 to 1.9 million barrels per day, followed by India at 1.7 million barrels per day. Turkey at number 3 at 305,000 barrels per day, followed by Syria and Brunei. This trend continued in August this year, with China being the biggest buyer once again, followed by India, then Turkey at number 3. You've got Syria at number 4, followed by Azerbaijan. Going forward in September, China is expected to remain the biggest buyer, followed by India, and Russian crude imports by Turkey too will also remain steady, according to Kepler. Purchase of Russian oil by India, like in the case of China and Turkey, has led to cost savings for the country. As per Kepler, if the average imports are 1.7 million barrels per day and the average discount is $5 per barrel, then the annual saving would be $3.1 billion. And with higher discounts, the savings could be as high as $5 to $7 billion. But a lot of things depend on the freight, where you buy it from, and who is trading. While Navarro has blamed Indian refiners for flipping black market Russian crude and selling it in the international market for profits, here is what the data shows. India's total exports of oil and petroleum products in 2025 was 1.3 million barrels per day. Exports were for largely refined products like diesel, jet fuel and naphtha. This was driven by India's strong refining sector and re-export of Russian crude-derived fuels, which other nations do as well. Finally, who are the major buyers of Indian energy exports? This is important. UAE at 142,000 barrels per day, followed by Singapore at 135,000 barrels per day. US at 80,000 barrels per day, Australia at 80,000 as well, and Netherlands at 60,000 barrels per day.
Parikshit, many thanks for joining us. In fact, staying with the global volatility and this tariff threat that we are seeing play out. Speaking of the Reliance AGM today, Chairman Mukesh Ambani quoted a part from Prime Minister Modi's Independence Day speech where he had highlighted that self-reliance is the yardstick of self-respect. Ambani said that Reliance will follow the Prime Minister's command with redoubled efforts.
Our Prime Minister, Shri Narendra Modi ji, rightly exhorted us in his Independence Day speech that the yardstick of Atma Samman, self-respect, is Atmanirbharta, self-reliance. India must become self-reliant to the maximum extent in key technologies, critical industries, and other vital sectors of the global economy. Throughout our history, Reliance has contributed to this mission of building a strong India, a Balwan Bharat. I assure our respected Prime Minister that Reliance will follow his command with redoubled efforts.
Well, that's the Chairman Mukesh Ambani on the Reliance AGM responding to the tariff threats. Up next on India Business Hour, ministers from 8 states support the proposed GST reforms but call on the union government to protect state revenues. That and more when we return. Catch all of CNBC TV 18's news and updates on YouTube, Facebook, Instagram, X and Jio Hotstar. The group of ministers have proposed a raft of changes across sectors like auto, FMCG, consumer durables, apparel and more. Most experts say the proposed revisions will give a significant boost to consumption. Timsy is standing by with more. Timsy, GST relief certainly playing its part in moving FMCG and consumer stocks in the market hoping that this is going to lead to a boost in consumption. What should we expect in terms of relief?
Well, the upcoming GST Council meeting on 3rd and 4th of September is likely to see a major GST overhaul, especially trying to give a consumption boost to the domestic economy. What we are given to understand from sources that the union government has put forward their proposal to shift to a two-slab structure where massive GST cuts are expected. Firstly, beginning with automobiles, there's a massive GST cut that is expected from current 28% plus cess to certain categories, that is the small car category, coming down to 18%, whereas the other cars, that is mid-segment and higher-end segment cars, which are likely to be in 40%. Similarly, for two-wheelers, that is motorbikes below 350cc, are likely to see a cut to 18%, and those above 350cc will also be under 40% only. Apart from that, tractors are being brought down from 12% to 5%. Entire value chain of tractors are also coming down to 5%. Cement, fertilizers, all are likely to see a cut. Cement likely to come down from 28% to 18%. Fertilizers to be brought down to 5%. All medicines are likely to come down to 12%. Rather, a few rare disease drugs and cancer drugs are likely to be exempt. When it comes to daily needs such as biscuits, shampoo, hair oil, ghee, all are going to see a massive cut. Also, when it comes to footwear and ready-made garments, there is a current price cap of 1,000 rupees. That is likely to be hiked to 2,500 rupees. So all footwear and ready-made garments below 2,500 rupees are likely to fall under 5%, whereas this was currently divided in 12% and 18%. So massive cuts are being proposed. To be seen is whether states agree to this proposal on the 3rd and 4th, and whether these cuts come in as soon as, even before the festival season kicks in.
Yes, Timsy, many thanks for joining us. And staying with that, ministers from 8 opposition-ruled states held a joint press conference in Delhi today. While they support the central government's proposed GST reforms, they have also called on the union government to protect state revenues. States have proposed that compensation cess be replaced by an additional levy on sin goods to shore up their coffers for at least 5 years. They believe that the cut in rates will result in at least 85,000 crore rupee revenue loss, which states will not be able to bear, and hence the suggestion for an additional levy for at least 5 years or more. Take a look.
We seek that this compensation protection should be there at least for 5 years, but even at the end of 5 years, we will have to look at the stability of revenues for the state and take a call to extend at that point. So there is an opportunity to levy an additional levy in the GST while maintaining the current rates as they are without increasing the rates, and use this additional levy to compensate the states for the losses.
8 साल में 27 टाइम जो है वो हम एक्सरसाइज कर चुके हैं एग्जम्पशन के ऊपर। 27 टाइम हम एग्जम्पशन दे चुके हैं और 15 टाइम्स हम रेट रिडक्शन कर चुके हैं। तब भी इसका मतलब लगातार देश के जितने भी राज्य हैं उनका रेवेन्यू लॉस कंटिन्यू हो रहा है।
If the 14% assured growth was given, last year our income would have been 54,000 crores from GST, but actually we are getting only 32,000 crores. And if GST was not there from the earlier sale tax or VAT regime, we would have got 51,000 crores last year.
So 8 states there saying that there needs to be an additional levy imposed so that revenue loss on account of the GST rate cuts don't hurt state revenues. Now, from gaming lounges to dine-in auditoriums, multiplex chain PVR Inox is looking to make the big screen experience more than just about good film. Shilpa Ranipeta reports the company is betting on the Gen Z fixation of cinema halls to draw in the Gen Z crowd, even while catering to its mainstay clientele, that's families.
If you are at a multiplex like this one, you would be here to watch a movie, grab a popcorn and then head back home. But going forward, multiplex chains want you to do much more than just that. From gaming centers to experience zones and even dine-in theaters, multiplex chains like PVR Inox want to transform these spaces into full-fledged entertainment zones. Leading this push is the second generation of the Bijli family. Ajay Bijli's children, Amer and Niharika, are spearheading what they call the youthification of cinema.
I think a big trend that we've discovered over the past couple of years of experience has just been that cinemas of today and these spaces of today are not just about watching the films. I think they're about creating environments, and I think that's mainly what the ethos behind our youthification drive has been.
They've picked two new properties, one in Bengaluru's Mahindra Millennium Mall and one in Mumbai's Borivali, to serve as pilots for this vision. The Borivali property is designed with AI-led innovations, while the new Bengaluru multiplex is built with gaming lounges, entertainment foyers and even a dine-in auditorium. The idea here is to make the movie incidental to the entertainment, not the main draw.
The second concept we've introduced is the dine-in auditorium, which we are extremely excited about. It is the first of its kind auditorium in India, where the focus is on cinema and movie watching as an incidental experience to the main experience of dining.
The new model will be an integral part of the company's expansion, with 20% of new properties being fitted with these new zones. Even existing properties are due to be renovated, with the entertainment zones getting to play the hero. The strategy here is twofold. One is to get existing moviegoers and customers to spend more time at the space, while also making the space attractive enough to pull in new ones. Now, these new formats will be slotted into the existing spaces here, so that while the costs don't really go up, revenues from non-ticketing spends will. PVR Inox says tickets will remain the bread and butter, but expects revenues from these additional streams to be sizable.
I don't think it'll ever be on par with the level of tickets that we sell for films, given the nature of the industry and given the appetite the consumer has for movie watching. But it will be sizable enough because of a family of 4 that comes into the cinema. The children are always looking for alternate activities to do, and gaming is one of the most family-friendly activities that they can do within the cinema premises.
This reinvention comes at a time where things are finally turning around for the company. In Q1 FY26, consolidated revenues rose 23% year-on-year, not just due to stronger box office collections, but also thanks to initiatives like 99 Blockbuster Tuesdays, which drove occupancy. The company has also been focusing on manufacturing footfall initiatives to drive demand generation. And these gaming zones and experience centers are slated to be a big part of that bet. In Mumbai, Shilpa Rani Peta.
Well, the weekend is here, but it's going to be a working one for us. Remember to tune in. We will be covering the SCO summit, where Prime Minister Modi is going to be meeting with President Xi Jinping. The live action right here on CNBC TV 18. But for now, from all of us here on the India Business Hour team, thanks very much for watching. The news will continue on CNBC TV 18.